Y'all can see, right? Okay, cool. Yeah, so today we're going to be going over profiles and how we use them. All right, so um, as we know, we went over my last stream. We went over phase of price, right? And we specifically focus on two phases of price, and that would be manipulation and also expansion, right? And the way we anticipate expansion is with manipulation, and we can view that through profiles, right? And what we want to do is we want to align a manipulation with an expansion candle. That's just it's gonna look something like this. Take you over here, right? So okay, if I can just all right, fine. All right, it's gonna look something like this, right? You're gonna have a low. Um, the daily open's gonna open down here or whatever. You're gonna have a low where you want to see manipulation creating the low of the day. Okay. And it's gonna look something like this when it takes out the low, right? As long as it has that small opposing run, once we get that CSD confirming the reversal, it is now supported by that small opposing run, right? Which supports an expansion candle, right? So manipulation, expansion, right? That's what we want to see. So now we're aligning open, high, low close with the phases of price, right? With IPTA. Right, so these are some profiles that I use. We're gonna talk about them. All right, so this is one of my favorite ones. I personally am a New York session trader. So this is a one that you see very often. And it's going to look something like this, where the previous two sessions either retrace or consolidate. And what this is a continuation signature, right? Meaning price is not going to reverse from these failure swings, right? So when we manipulate and you see this low resistance liquidity on the opposing side of manipulation, we can expect distribution throughout New York session that's going to create the the daily range, right? Because at this point, there has been no expansion throughout the daily range. And this is when New York will manipulate to then expand, right? Manipulation being the trigger for expansion. Right? This is how we can anticipate, right? You're gonna align this expansion with a daily candle, right? This daily wick. So the key to my trading is I like to see manipulation that creates the daily high and low, basically creating the wick of the daily candle. And I like to be positioned around here, around the opening price of the daily candle, to then catch expansion. Right, that's the key. Right, so this is the New York reversal. Again, either price consolidates, post session consolidate, or retrace. Okay. And another key thing to note is I like to see the manipulation with an hourly swing point, right? And that's it. That's how I keep it mechanical. That's how I keep it high probability. Um, and I like to pair it with an SMT always. You're going to confirm with a CSD, and ideally, the manipulation um, occurs within a driver, right? Or the confirmation to a manipulation prior to a driver. So let's say we have 9:30 open right here, right? If we manipulate prior to a driver, the confirmation to this manipulation is if the driver expands away from manipulation as it should, right? If there's going to be manipulation, it should expand away. So that's the confirmation. Um, but if we, open up the driver here, manipulate, and then close through the opposing candles, that's added confluence, right? So here is, London reversal. Probably already know this, but it's fine. Um, right? The ideal scenario for a London reversal, if you're going to trade London, is that Asia session consolidates, right? And again, a continuation signature, right? You're coming off of an expansion, consolidate. You're either going to take out the Asia session lows, usually an hourly swing point low or something. It can be a fair value gap as well. Some sort of key level, right? Where the daily wick is being created in. And again, align that with an expansion candle, right? An SMT. I'm going to pair this with an SMT and a CSD. And the key to a New York continuation is when London session actually doesn't expand. It just puts in a low. It just puts in a valid low of the day. So you can actually catch the expansion in New York. The invalidation to this, for me at least, is when London session expands, right? Because then what can we expect, right? A new phase of price. Um, and New York can be choppy oftentimes. It can just consolidates. It can retrace. And I don't want to trade either of those, right? I want to trade expansion. Um, so when I see a large range printed in the overnight sessions, that's an invalidation for me, right? Um, so let's move on to this next one. This is one I learned from a fees. I don't know if you guys know him, but you guys should look him up. Um, Very good trader. But this is something that you guys probably haven't seen, but it's called the delayed New York retraction. So let's say we have bullish daily buys, right? And this even the overnight sessions, they don't create an established low of the day. They kind of just fade to the upside. So kind of just, we open up, make a little lower, whatever, and we just fade up, just creating failure swings. This is when New York session will manipulate the daily range, creating the daily wick, and then expand away, right? This is one of my favorite profiles and one of the easiest to spot. Um, and you're also going to line that with the small opposing run rate and the SMT. And what this also does is when price leaves the daily open, right? What is that doing? It's eliminating the possibility for a bearish expansion candle. So when you see price come back, it's going to look something like this, right? It's going to look something like this at one point, where it turns into a bearish candle, and the wick would be somewhere up here at this point, right? London high. It's going to look something like this. Now, is it likely to close like this? No, right? If we have manipulation at the low of the day, that small wick, it's just going to fill in this wick, right? Close an expansion candle, right? So what the key thing is here is this manipulation needs to happen at a relevant time where we can manipulate but also expand, right? If this manipulation happens at like 12 p.m., that's totally irrelevant, totally an invalidation. Right? If this happens at 9:30, right? That's good, right? Or 8:30, it manipulates, and then 9:30 expands. Right? That's what we want to see, right? And again, pair it with the volatility driver, SMT, CSD. So pretty simple stuff. Now we're going to get into some examples here. Now, what if there is no manipulation at the low of the day? This is when we revert. Well, first of all, what I need to see is we need to be in a continuation on the daily time frame, right? Um, because I'm not going to trade away from manipulation for for reversal, right? I'm not going to trade away from you know, I'm not going to. I'm going to demand a reversal signature. I can't talk. I need to demand a reversal signature for a reversal daily candle, right? So if I want to trade continuation, what needs to happen is we need to open up near an invalidation level, right? In this case, we have this short-term low where it sweeps at this low. So protected low, right? We have a CSD. So price is opening in close proximity to that. So this is when we can already assume that the low of the day is going to form inside of this level. Because if we start to break this low, what are we doing? We're running away from the daily open. That's creating a larger opposing run, which you don't want to see, right? So we can already anticipate the low forming here. And this is when we get that intracandle CSD that we like to see, right? We open low first, creating opposing candles, and we close through that, right? And at that point, I can assume that this is the low of the day. I could trade away from this, right? And let's say we open up in New York session. Ideally, you can always look for a manipulation low, a protected low inside of here. That's what I always like to look for. It can look multiple different ways, right? It can look something like this, where we actually create an SMT, right? This is protected low. Let's say we close over this. That's also a protected low. And you're just trading away from that low of the day, right? Another thing to note about just trading weekly profiles or just anything, right, is we don't want to enter way up here in the daily range, right? Because if you enter in here, let's say, with your stop loss, let's just say like right here, right? And you're demanding 2R or something, the daily range is already expanded, right? So for you to actually anticipate this, right, is demanding a bit too much, right? We want to enter near the opening price, right? And this is why I love entering around manipulation, right? Because I want to get in before the manipulate. I want to catch that manipulation. I don't want to chase it. I'm not trying to enter here, right? Ideally, I want to enter like down here, right, to catch that. Um, that's just how I trade personally, and it's just a really good filter in my opinion. I think it allows for the highest probability expansions for the day. I'm going to show you guys some examples here. I think that's everything. So basically, all it is manipulation at the higher low of the day, and then align it with the time, right? So all profiles are used for is to anticipate the next time, the next session. What is it going to do, right? So if London puts in the low, if it manipulates, then what will New York do? Expand, right? But what if the previous two sessions don't do anything? Well, this is when we demand New York to create the low today. It has to manipulate if the previous two sessions didn't do that, right? It's just an if-then process. And then we're trading within expansion candles, right? We're aligning, face the price, so manipulation, and then we're expecting expansion. But to expect expansion, what do we need to be trading within an expansion candle, right? So you can't have one without the other, right? If you're fading a candle, let's say the daily open is way up here, or you have a very large opposing run, let's say. What you need to do is you need to adjust your targets. So you can't be targeting way up here, right? Because we don't expect price to close way up here. We don't expect the price to close the large wick way in the highs, right? It's likely to close back inside the range, right? When it has that large opposing run. So we need to adjust our targets back to the daily open or in areas, above the daily open, just slightly above it, right? So just in close proximity to the daily open, or maybe back into the range. But this is not the ideal scenario, right? We want to see that small opposing run supporting our expansion idea, right? So yeah, this is basically profiles and how I use them. Again, manipulation is the key to my trading and really any trading, right? If you look at AM trading, AM approach, all he's doing is trading away from protected highs and lows and targeting low resistance liquidity. So all this is high resistance being created, low resistance in the form of session highs, ideally, right? That's all this is. Very simple. So let's go into some examples here. I took this trade on RTY. I'll show you all this. So if you looked at my last stream, sorry, let me get rid of this stuff here. Yeah, okay. So if you look at my last stream, I talked about the phase of price, right? If you look here, where we have expansion into lows. So what can we expect and already anticipate a new phase of price, right? A pause in the market. That's what we get. We get a consolidation, right? Why is this consolidation, right? We ran out this low, right? Possible manipulation, but what do we not get, right? We don't get an expansion away from this manipulation. So therefore, it's just a consolidation, right? So when we take up this high, what am I expecting? Price to deviate back into the range, right? And like I said, I don't need to actually see a reversal candle here, right? That's just how I trade it. Um, I can already anticipate price to fall back into the range, right? When I look at the opposing side of this manipulation, what do I see? Failure swings, very obvious failure swings, right? So the easiest target here would be the previous day's low, and that's what I target. Um, so all I'm looking for is a profile to support this narrative. So let's go ahead and look on the lower time frames here. So all it is, expansion, consolidation, meaning we can't reverse from consolidation, meaning price is not likely to do this, right? Not likely to expand uh, without taking out this low, right? So this would be, if it was to reverse, right, we need to take out this low and expand, right? But we have here, this is the ideal scenario for trading a consolidation. We take out the consolidation high, distribute to the consolidation low. That's the ideal. This is the most high probable trading that there is right here. When we drop down to the lower time frame, what I see is the previous day did not obviously form a reversal. So this is when we get that intra-candle chain state delivery right here on the hourly time frame. And this is where we're going to use drivers. Okay. So at this point, we just have Asia, London really just consolidating, as you see, right? It's just consolidating, right? So what we do here is we kind of just open up New York session in the middle of the range. So this is when I demand I'm not going to trust any of these opposing candles, right? I'm going to demand a manipulation, right? It's as simple as that. Trading away from manipulation with an SMT, right? So when I look at the lower time frames, do I see 9:30, make the opposing run to our draw, right? That's all we're looking for, right? When you have a draw on liquidity, let's say it's this line, all we're looking for is an established low to get on side with the expansion towards this high. That's it. That's all trading is. Um, so when we see a manipulation, right, we know expansion must occur after that, right? What are we drawing towards? This high. That's literally it, right? So all we're looking for is an established low to trade toward draw. It's higher, right? So in this case, my draw is lower. So I want a high to be manipulated to trade away from. And that's what we see here, right? So if 9:30 makes the opposing run, manipulates, what will 10 a.m. do? Expand, right? It's the if then process, right? Manipulation. What's the next time going to do? Distribute. It's really that simple, right? So this is my trade on Friday. Now I'm going to show you some examples here that I also took. So let's go over the daily chart here, right? So let's go over the phases of price here. Expansion back into EQ, this range. What do? We consolidate, meaning price must take out this low, right? The consolidation low, but we get an SMT here, which is manipulation, right? And we manipulate this little low, which is like a consolidation within a consolidation kind of. But we take out this low, right? And so if Friday manipulated, this is the weekly open. If Friday manipulated, then what can we expect Monday to do, right? We want to see expand away. We want to see early week expand away. I don't want to see consolidation on Monday or Tuesday because that's not what price does after manipulation, right? So you see how we're already using phases of price, the characteristics of a manipulation, right? Price doesn't hang around after manipulation. It distributes with speed. That's what we want to see with little retracement. I don't want to see any retracements. I don't want to see any deep retracements. It's a complete invalidation. So when I come to the charts here, let's also look at the consolidation high, right? Um, what are we what are we doing, right? We're not manipulating this high, right? What we do is we create this small opposing run and then we close through it. So if you look on the hourly time frame, this is what AM talks about with the failure to manipulate is price. You could say it tried to manipulate here, but when we close through that, right, that's your invalidation to the manipulation, right? Um, so we see here. Now let's run through the days here of distribution to the highs, and then we'll talk about the short that I took. Well, so if you look at Monday, we're framing a bullish bias, right? So it's a bit ugly here. I want to show you this correlated asset. So we have candle two closure here, right? If I show you right, indecision candle, look internally to that candle. Do we have a reversal? Yes, right? We have expansion into low and expansion away, flows through with SMT. Those are all the characteristics that we want to see for a manipulation, right? And then we see some sort of consolidation here, right? Or retracement, whatever you want to call it. But we see intraday is we open low first. That is always the ideal scenario for trading a bullish candle, right? We're going to open low first. This is the invalidation if you're trading a bullish candle, is we open high, right? And then we create some sort of manipulation and then expand back into the range. That's not what you want to see, right? But here, where we open low, take out this low, and then have an intra-candle change of state delivery. And then we are trading back to these opposing candles with an SMT, right? So this right here is where I like to trade, right? To catch around the open price, to catch the actual expansion, okay, right? So hopefully that makes sense. We also close below these opposing candles, right? So let's go to the next day, right? So also, what is this manipulation paired with? That small opposing run, right? For the daily candle. Now look at the next day, right? We expand. What are we doing? We're trading between a low and a high. So more so consolidating, right? So expansion consolidation. What does that mean? Right? Well, we went over this last stream. That's a continuation signature, meaning price must expand again. What is the ideal scenario to trade away from a consolidation? It's manipulation, which is what we have here, right? This SMT, right? The correlated asset takes out this low. That is manipulation, right? So combine that with the small opposing run for the daily candle. So now you have the criteria met. We have London reversal. I expect New York continuation, right? When I open up New York session around 8 o'clock here, this is exactly what I want to see. Notice that the daily range has yet to really expand. This is exactly what I want to see. This is when I can actually trade New York session, right? Um, that's ideally what you want to see if you're a New York trader. So, sorry for this here. That's that day, right? not gonna go over all the entries and stuff. I'm just going over the profiling, the framework here. And then you get this opposing candle. This is your validation right here. You can just enter this right here, right? You have a protected low. Price shouldn't revisit this area. Now we're expecting distribution. This is when you can use deviations, right, of this manipulation. As you see, we hit the -2 there. All fee, right? Now I traded these 2 days in particular here because I had a very clear draw on liquidity, which previously is high, right? If we're not going to manipulate this high right here, we're going to expand past this. We're going to look at the next relevant level in the daily chart, and that would be here, right? This high. Very simple, right? Now these 2 days have news. This is why it's uh, important here. So when I open up New York session, I want to trade foolishly, right? When I open up New York session here at 8 o'clock, this is the 8 o'clock candle. I see that there's no relevant low of the day, right? There's no manipulation that I demand from the market. I demand a manipulation. And there's none that I just won't trade or I will wait for it. But here we have a manipulation. What am I pairing that with? SMT, right? What am I also pairing that with? Small opposing run, right? So this is all great. It's all aligned. Now we have 830 CPI this day. I'm going to show you, right? 830 CPI. I have the possible manipulation candidate, and notice how this is the only relevant area for the low of the day. I don't want to see price expand past here because there's nothing relevant to the left for price to manipulate. So that's why I also like trading manipulation because there's only one area price to manipulate, and with time you start to see the same thing over and over. You'll get a feel for what is a relevant high and low. That's why I just revert to the hourly time frame, right? If I just look at all these lows and stuff, you're gonna get faked out. If I look at this low, you're gonna get faked out by this or whatnot. I mean, you don't get a continuation signature on that, but this is why I just demand the hourly. Okay. So I get the hourly manipulation. I get it close through. Now notice what happened prior to the news event. We manipulated prior. So what's the confirmation to a manipulation, right? If we manipulate prior to news event, it's when it expands away. So 830 opens, it expands away. That's your confirmation that price shouldn't revisit this low, right? And then I took a fractal model right here, right? There is an hourly 5-minute fractal model. Sorry, I'm lagging. All right, here we go. So, right, so here we have a candle 2 closure. We have yet to expand to anything. So notice how it's just failure swings the high of the day. It's also in the form of session highs. That's always the best, right? You look at the previous day, at the previous high as well, right? It is a session high of the day at the time of this manipulation. That's exactly what it's ideal. Right? Um, yeah, I'm trading this candle 3 higher, right, to this draw up here, right? So let's go to the next day and why I traded this day short. So as we know, when we expand into a high or a low, this is an objective, right? Once we expand into a high, this is when we get a new phase of price, right? So what do we notice about this weekly development here? We have 3 days. For the first 3 days a week are expansion candles. So if you've been to the course, you know that this is the Thursday counter weekly profile where we look to trade Thursday and Friday back into the weekly range. Another thing to note here is we also have SMT with the correlated asset. If you look here, right, we're creating a lower low, right? This is why SMT is so crucial because it can already help us anticipate these reversals. Um, so what do we demand to trade back to the range here? Well, we know that this candle here, it hit the high, right? So I'm already anticipating a, be back into the range. It's that same model that I've showed you guys, right? It's the same little simple approach where the previous day manipulates. How did it close, right? This candle closed a reversal candle, so I don't want to see price revert back to this low. This here closed an expansion candle. It's also candle 1, right? Both these are candle 1s. And we focus on candle 2 and 3 after candle 1 hits the key level. Here, clearly it's an expansion candle, so I want to revert to the high as a reversal point. I want to see that shallow opposing run to trade a candle to reversal. Right? That's how you actually trade a candle to reversal. There's 2 ways a candle 2 can print in the market. It's a candle 2 right here, right, where it's an indecision candle, or oftentimes there's a couple ways that you can anticipate this to happen, right? Because this opposing run is it's not like too large, right? For one, it's just the way the daily forms, the daily candle forms. So let's say it's open high first and then takes up a low. So that's not how a bearish candle forms, right? If it went open low first, then we could possibly, you know, um, trade that candle, right? Because that supports a bearish candle. So that's just one thing. Um, but here we need that small opposing run, right, to support expansion back. I don't want to trade. I don't want to trade any other phase than expansion. So when we trade into a high, right, price could retrace back into this fair value gap, but I don't want to. I don't want to trade that, right? Because that's not expansion. I'm not going to trade away from failure swings. You see the difference here? I'm trading away from the manipulation to trade expansion back in the range. That's the key difference here. So let's look here on the hourly time frame. Let's look at the framework here. So what we have is expansion, consolidation. So again, we know that price can't reverse consolidation, so it must manipulate the high and expand away from that, right? Expansion mouth expansion, that's the reversal signature, right? This is A and B reversal here. And what do? We retrace back into this range, right? This key level. Again, another continuation signature. Price is not likely to trade away from failure swings, right? This is just lethargic, right? Let me form an SMT here. So this is a possible London reversal here. Now if I look at a correlated asset, this is why I call it a London reversal, is because look at this day here, by the way. It opens high first, manipulation with SMT, right? This is why I call it London reversal, because the correlated asset um, manipulates, right? And you have failure swings to target, right? So it's technically a London reversal here, technically, but it doesn't really matter. We have manipulation, right? And SMT. You can look to trade here, but again, I don't trade London session. Here's your continuation signature right here on the hourly time frame, an ideal swing formation, right off of a key level. So you can trade that, but I trade uh, New York, right? So we also had news this day. I'm going to show you at 8:30. We had PPI. So let's look how to incorporate the economic calendar as we did the prior day, right? So when I open up 8:30, we're already in distribution. So when you're in distribution, what do we want to trade away from again? Protect the highs and lows. So I'm going to look and see if I'm near any protected highs and lows. I want to really consider this little swing here, this protected high or low. I'm not going to put an entry in here. So I'm going to wait for news to create an opposing candle. So what we do actually is we open up, we manipulate this high with the correlated asset. So we're going to SMT. So now we're forming a potential continuation, right? What are we seeing? Manipulation on the opposing side of our draw. That's all it is. So once I see a closure through here, that's your confirmation, right? CSD, SMT, right? Close through. Very simple, right? So that's my entry right there. You can go look on my Twitter if you really want to. Stop up here. Target the previous day's low. Right? Something like that. Very simple trades, right? Just trading away from a manipulation, right? Manipulation high of the day. Trading with an expansion candle on both days. Um, this is here, the continuation. This here is more of trading the manipulation almost. I'm not buying the manipulation, but I'm entering around the manipulation. The daily candle. Here is a continuation, right? I'm pretty far away from the opening price and the manipulation. There's a continuation of that. But it's the same thing fractally, right? Trading away from some protected high on the lower time frames, right? Very simple approach. Now I'm going to show you guys some examples on YM. This was this week here. So when I go to the daily chart, again, we have, I mean, I can't even count how many days of consecutive expansion. Just a ton, right? So it expands this low. What phase of price do we get? Consolidation by this inside bar. So again, I'm not going to trade away from this low. So I demand, if we're going to trade back into the range, we need to take out this low here. Sorry, I'm trying to make a line here. I'll just do this. All right, I would want to see reversal here. And I talked about the ways price reverses in my last stream. Expansion consolidation, we're going to revert to this low as the manipulation. The trader from this low, essentially. Trade back to the range. So here, what do? Expand, then we consolidate, right? Now this is a Monday. right? So when we think about the weekly profile, open, low. So if I go to the weekly candle here, the previous candle hit this low. Again, it's the same rule where this candle hits low, punch to the next candle back to the range. But obviously, you're going to get an indecision candle with this holidays and stuff. But here, I see this Monday's low. It's closing rather weak, um, to where there's could be some sort of invalidation level, right, inside of the wick for us to key off of, essentially, right? I draw this here, right? So we're gonna go inside of here. And yeah, when you think about a weekly profile or a weekly candle, open low first would insinuate that we go higher, right? And again, I'm not going to trade away from failure swings. So when I go to the lower time frame, what I see here really is just expansion, and then I see just failure swings. Like I just see consolidation right here. So when we get expansion, now with expansion inside of this wick, that is a reversal signature away from EQ of this range. Look at the 4-hour chart, right? These opposing candles, this fair value gap are all key levels, right? You can even see it, right? Expansion, this consolidation, and we manipulate that consolidation. We expand again, and then what do we want to see, right? Especially after expansion the prior day, the most ideal thing that you want to see is the previous two sessions show a continuation signature. So what I mean by that is, let's say the daily opens here. So it opens right here. And the previous day, we expanded. So what I'm saying here is, after expansion, what can we get? Right? A new phase of price. And if it is consolidation or retracement, this adds on to the narrative that we're going to see a continuation, right? Respecting the upper half of this daily candle or whatnot, right? So you're either going to have like a key level here in the upper half of that candle to key off of, or you're going to form an intraday reversal. An intraday reversal is just a reversal off of some low that was formed intraday. So like an hourly swing point, maybe it's a session low to reverse off of. So all this is expansion, consolidation. We know price can't expand, right? So when price manipulates the consolidation low, look at the opposing side of that, you see failure swings. We already know prices can't reverse. So this is when you get expansion, you can cash that daily expansion range. This is how you can literally anticipate this. Like, that's why it's so good, because you can actually anticipate it before it even happens. So here, you get expansion, right? We have these failure swings already, and then we get consolidation, right? So what's the rules? An hourly swing point, an SMT, and a driver. So let's go to lower time frames. What do we see? Right? Manipulation, SMT, 9:30 makes the opposing run to the draw, manipulates, and then we start to close over, right? That is your continuation signature. Is there news right here, by the way? Okay, there's not. And then 10 a.m. expands, right? So does that make sense, guys? Very simple. And then what do? We expand it into an objective. So again, after expansion into an objective, we expect a new phase of price. What do? We consolidate. So when I come to New York session, I'm asking myself, is there a high or a low of the day put in? That's all you're gonna ask yourself. If there isn't, if I'm bullish and there isn't a high of day put in, that's great, right? If there's just fair swings there, that's literally perfect. That's what I can target, for continuation, right? If I look, if I want to be bullish and there's no low of the day, well, then we need to create one, right? And here's the hourly time frame, hourly swing point with S&T. This is manipulation, right? Use the economic calendar here. What do we see? 8:30 makes the opposing run to the draw, creates S&T. And then if 8:30 manipulates, what will 9:30 do? Expand, right? That's your confirmation, is when we expand away from manipulation with the driver, right? So hopefully that makes sense, right? And as well, you have, it's also manipulation instead of a fair value gap, which is also nice. But yeah, so what we're doing here is we're aligning this manipulation with the small opposing run on the daily time frame. Look here, this is a rather large opposing run. But the thing why this works here is, look at the high of the day. It's consolidation, right? So this can just be your target. This manipulation, this high. That can be your whole bias for the day. That can be your whole trade. And this is what I do most times is I don't need the most clear daily draw of all time or the most clear picture on the daily time frame. If I see something clear intraday, I'll just do an intraday manipulation by trading an expansion candle to an intraday draw. Like, it's just simple as that, right? Or I can use, intermediate time frame draw, like hourly swing highs and lows as draws. So I hope that makes sense. That's how I use it. I focus on manipulation. So let's see if there's any questions. You guys can ask questions now. Um, let's get, okay, who's up? Oh yeah, Beats. Yep, this is him. Yep, go watch profiles. Profiles is a very important part of trading. Yes, it is reported. You're not hearing anything? So please explain Bitcoin today. Okay. Is this what you posted? Okay, that's someone else. Yeah, I'll explain Bitcoin. Sure. I don't really trade Bitcoin, but I'll look at it. Do I have this? Is it even active during the day or during the weekend? I don't even know. All right, so what we have here, it looks like, right, is some sort of consolidation. You manipulate the consolidation high. So it's expansion into this high, expansion away. We're taking out some lows, leaving this fair swing, right? So really, you could have looked for continuation here at this fair value gap. But once we leave this failure swing, you basically have a range low, range high. We're just consolidating, leaving failure swings within both sides of the range. This is a consolidation signature. So when we manipulate the high, right, then we want it to distribute to the range low, ideally, right? And again, expansion to the high, expansion away, reversal signature. So we look here, you can just see the phases of price on the 4-hour chart where we expand, consolidate, right, which is a continuation signature, meaning price, it doesn't mean price is going to continue way up here. It just means price needs to trade to the consolidation high. Then we can get what? New phase of price, right? So expansion, consolidation, manipulation, expansion, consolidation. Take up both sides of the range here. Another way we can leave a consolidation. If you guys want to watch AM Trade's video on how to trade consolidations, this is in his video. So you can just see the phase of price, right? Today, this looks absolutely disgusting. Yeah, I can understand why you got stops, right? So if I don't even know if it's active during weekends. Let me check for you. I mean, I don't trade it, but I'm just looking back. Sunday. I guess it is, huh? A little bit. I mean, this is last Saturday. It was very lackluster. So maybe it's just not a good day to trade. It would make sense. Uh, yeah, this is last Saturday too. It's just nothing. It's just like ass. This is also last. Yeah, I wouldn't trade Saturday. That's what I can tell you. It's terrible. It looks absolutely like terrible. Uh, so yeah, I wouldn't even trip about that. Right? Uh, uh, oh, this is your trade on Bitcoin. So first of all, I wouldn't use 930. That's irrelevant for anything other than indices. 930 is absolutely relevant. Like gold, irrelevant. Silver, irrelevant. Bitcoin, irrelevant. I don't think that's a relevant time. And the one thing I don't like about um, just trading crypto is there's no volatility. There's no economic calendar. Kind of just like kind of weird. Kind of. I definitely wouldn't trade it. I would trade it on like the hourly or something. Like lowest time frame execution would probably be like 15 minutes or something. But I would like the hourly stuff. Let's get on. Hey Garrett, apart from candle closures in respect of wicks and equilibrium, what else do we look internally for specs? Um, Handle closures. Okay, so you mean like as far as just anything that helps with bias in a sense? So like closures help with bias, respects to equilibrium candles and stuff like that on hourly or yeah, so I look like my whole thing for me personally is just phase the price and open high low close. That's the basis of any model, right? So if I see consolidation, I want to see if we trading this low, I want to see price right away, right? I want to see manipulation. If price does something like this, that's not showing a willingness to trade away, right? That's kind of my filter is manipulation and the signatures of each phase, right? A manipulation doesn't do this. Doesn't consolidate after take on this low. Doesn't just kind of just do this, right? Doesn't make a deep run past this low. Um, so stuff like that. I went over in my stream, um, and again, I want to trade expansion candles, right? So I line this manipulation with an expansion candle. That's my filter for price. If you're, because equilibrium of previous candle highs and lows is just a filter, right? For what we want to trade. Um, so is respect of uh, you know PD arrays and stuff. It's all filters. For example, T also added zero point 0.5 CSD. Yeah, like this is stuff you want to see, right? This is all IPTA, by the way. Like because in expansion we don't disrespect opposing candles, so it all reverts back to phase of price. Literally everything. Just open eye low close and phase of price is all you need to study. If you look at anyone's model, if you look at T-Trade's model, if you look at AM's model, that's all it is. Oh yeah, sure. First, let me get to like some of these other questions. I'll get back to you really quickly. What correlated asset for GC? Oh yeah, so for gold, there's two I use. So it doesn't matter which one is the correlated asset because remember, S&T is just a confluence, right? So I can use both of these assets. Just like if you're going to trade, let's say EU, you can use GU or DXY. So for gold, you can use silver, and that is going to be this ticker right here. Right, it's SL1 or CIL1, or um, gold euro right here. Is very correlated to gold. Both of these, especially honestly, this is actually like almost more correlated. A lot of people don't use this or know about this, but right, if you go to like XAU USD, right, obviously and EU are inversely correlated, so that's how it works. There, wait, but if there's a significant expansion during London session, wouldn't you expect New York to consult? That's exactly why I don't trade it. That's my invalidation. That's what I said, right? So like, look here. If London session, this is in the course, by the way. If London manipulates but also expands, the daily candle is going to look something like this. Like the range is already developed. So after expansion, anyways, we can already expect a new phase of price. So we can expect price to retrace or even reverse or consolidate. It's unlikely to just expand again, right? To have this crazy enormous daily range. So ideally, this is the scenario. We put in a low in London session, but we don't actually expand yet. Maybe we validate the reversal, but let's say New York opens right here, then I can trade away. I can trade around the daily open and still trade that expansion, That's the ideal scenario, a London reversal. But I always personally like trading a New York reversal. I just can trust it like uh you see most of my trades are all New York reversals of some sort. What is SMT with RTY? It's actually let me show you. It's YM. I learned this pretty recently. So if I look here, hourly time frame. So if you look on RTY, this 1500 low on Monday was taken out, right? You see that, right? So that's the SMT there. Same time takes out the low. And if you look here, 9 o'clock is the low of the day on RTY, but on YM, 9 o'clock is making a higher high, right? Off an hourly low. So yeah, but you see how there's manipulation creating the low of the day, especially in New York. This is when I expect New York to basically create the whole daily range expansion. It's just the best, in my opinion. Do you use fair value gaps only once, or do you look? Yeah, I know what you mean. So kinda like if you ever look at a manipulation instead of a fair value gap, that's always like cool. So you feel like a swing high. Let's for this example. This is always like it's like ad influence, right? You have this manipulation swing point form inside of a fair value gap because essentially this portion of the fair value gap is not filled. Um, so yeah, it's a good ad influence for sure. But it's not like totally necessary. So like here's another example. You have this low, you know. But yeah, not like something totally necessary. Definitely out of confluence for sure. Because if you look at these 4 hour fair value gaps, you just have hourly manipulation inside of it. So if I'm going to trade a fair value gap, because I do trade internal range to external range, um, in order to get right, in order to expand out of a key level, what do we need? We need manipulation. So that's why I require a manipulation out of this area. Um, so yeah, even like a even like a opposing candle on the daily time frame, I'm going to require manipulation everywhere to trade up. What is the 2 indicator? Wait, oh, this here, 2 degree. Oh, this. This is just a watermark. So if you go here, you can just add a quote text here. It also shows you the asset stuff. Just that. If you guys want a kill zone indicator, it's this one. ICD kills in the pivots by TFO. Yeah. Okay, so where are we at now? Yes, on hourly look lower. For example, T also added 0.5 CSD. No, so like 0.5 CSD is what you want to see for higher time frame CSDs, as well as like intermediate time frame CSDs to support price higher and lower. Like because in expansion, we don't want to see those get disrespected. So like it's not really only for this indicator, but let's say there's a candle to closure. So let me make these like lines or something. This is what he means by that. So let's say this here. Let's say we have a valid candle to closure the CSD. What he means by that is he wants to see these opposing candles be respected, right? With the candle 3 open, right? He wants to see the candle 3 high being respect of the zero point 0.5 of this range. So it's not only using the zero point 0.5 of this wick, but it's also using the zero point 0.5 of the opposing candles, right? That's what you ideally want to see. That makes sense. So it is like another little filter. What is EPTA you refer to? Wait. Oh, you mean IPTA? IPTA is the phase of price. So it's just I forgot what it stands for. I don't really care. It's just not really relevant, but it's just expansion. Okay, let me not do this. Let me just I went over a stream, by the way, on this, so I would recommend going with that. But it's expansion, consolidation, retracement, and reversal. These are the only four phases of price the market undergoes. Right? This is a fact. It's not even a theory. Um, so after expansion, we can get either one of these phases, right? And they all characteristics, right? Consolidation. And we can also anticipate a new phase of price after expansion into a high or a low. If we consolidate, right? And each phase tells us something, right? So these two phases here, consolidation, retracement, are continuation signatures. So let's say you have a range from high to low, and your tracing signature is price leaving the retracement points with failure swings, pretty much. So that would, insinuate price would then manipulate, right, somewhere inside of this, maybe a fair value gap here or something. Manipulation would be the trigger for expansion, right? So it's really just expansion, retracement, expansion, or we get consolidation, right? This is also another continuation here. Price is not likely to do this. It's not likely to reverse from failure swings. So the ideal scenario is we take out this side of the range, then expand to this side of the range. But price doesn't have to manipulate here. It can just expand again, or sorry, it doesn't have to manipulate to then expand again. But in order to anticipate the expansion or retracement and consolidation, we need to see manipulation, say anticipate it. So that's why manipulation is so important. It's because you're gonna actually anticipate it. But I went over that in detail. Where can I find AM? Go on his YouTube channel. It's easy to find there. Yeah, that's what it stands for. You trade. Did you trade live? Oh no, I didn't trade live this week. I did. Oh, you mean I thought you meant like live stream. Yeah, I did trade live this week. I had a really good week actually, surprisingly. I wasn't gonna trade much, but it was actually a really good week. Uh, do you have preference? Oh yeah, definitely. I trade futures, so I don't trade forex. But I definitely prefer indices. So like my top three would be indices, gold, and oil. They're just the most volatile during New York. So if I show you one of the trades I took on ES, like absolutely clean as hell. Look here. Let's go to the daily time frame. So again, phase of price, right? There's S&T up here. That's why we're reversing from these failure swings. But basically, we expanded this low. So again, new phase of price. What do we get? Consolidation, right? So meaning we must revisit this low. So we want to see how price reacts to these lows. That's all we're looking for. How does price react when we expand into a higher low? That's going to tell us what will follow. So here, clear manipulation, right? So if this is going to be a true manipulation, we're going to expand away the next couple of days away from this low. So just with that narrative alone, let's go into the intraday timeframes. So this is a Monday that I traded. Wait, was it NQ or ES? I don't actually remember. I guess it was ES. Let me see something now. Hey, I did trade this, but I don't think I'm thinking of the right thing. Hold on. Oh yeah, here it is. Sorry. It's this day. Let's say. Same thing here though. It's just this day. I did trade this day, but I traded short to this low. But here's this back-to-back frameworks right here. So what do we see? We're anticipating bullish prices, right? Um, this is Monday, by the way. And what do we see? Expansion, consolidation. You have a range from here to here. Right? So I want to frame reversal off this low. But the thing about this here which I don't really like, is first off, we don't have an SMT with this low. That's one thing. But another thing is, 8, I think we had news this day. Let me check. No, we didn't. We had 9:30 though. So we manipulate this low prior to 9:30. So I don't want to see price you know, mess around here too long. But if this is going to be a manipulation, ideally want to see 9:30 reverse, right? And it doesn't. It then takes out this low again. So we open up here like a shallow tracing up. Then we actually create SMT here, right? But then we um, come lower. This is not really what I want to see necessarily. The profile looks good. Everything's great. This is why it works. But it's not like totally A plus to me. I took a small win in here. It was it December 19th? No. What day was December 19th? Okay, never mind. I think on my birthday, but no. I took a small win in here, just hit like it was a day before Christmas Eve, so I wasn't trying to do too much. So I just hit like a trading day. I think I made like it doesn't really matter, but I hit my trading day and then I just stopped for the day. But this framework here, I wanted longs, but I wanted 9:30 to do it. I wanted 9:30 to reverse. And I'm missing two things here. I'm missing SMT. The profile is a check, or that's a check, right? But I'm missing SMT here, and I'm also missing a volatility driver. So it's just like I'm good. I'm gonna take my win for the day and hop off. But as far as the profile goes, it's perfect, right? We have both sessions consolidating, New York reversal. Um, this day, obviously, I'm not gonna trade. Um, but this day here, I see that we had a strong closure the previous day. So if you look here, it's an expansion candle. So if we want to trade back, higher, right? I want to see price in respect to this 50% or frame the reversal around the 50%, right? I don't want to see it come lower. So see how this is positioned right above EQ of this candle's range? That's fine, but we need to reverse off this low. If you don't reverse off this low, I'm not interested. So again, an hourly low, right? Here, I don't know if there's SMT, but again, same profile, right? Where we have just session highs, right? London makes the opposing run. We consolidate and we manipulate here. Um, I don't think there's an SMT here though. Yeah, there's not SMT. Maybe like YM. I mean, there's SMT with YM if you want to count that. Nothing like too crazy, but I believe there's SMT in the lower time frames. I believe. Right, but what we see here is 9:30 makes the manipulation. So that's why I trusted this day a little bit. And yeah, I traded this and posted this in my channel. Um, it was pretty clean, but I think it doesn't have SMT actually, which is fine. It's like not a total necessity. A lot of people are asking me why I traded YM here, or sorry, ES. It's because you can see. So just look here in this lower time frame price action. You can see the strength difference. So just look at this dip here. So you see this dip right here at around 10:15. If you look at that on NQ, look how much lower it is. We didn't even CSD on this asset. So that is a form of divergence, but it's not the divergence that I really care about and look for. But it's just a relative strength rate. We see this asset actually CSDs, and then we get continuation signature. I don't even know if we CSD on the 15-minute. There's nothing to CSD on the 15 minutes, just a wick. But yeah, you just look at these clean opposing candles, right? And look at the reaction to this low, by the way. Expansion into low, expansion away. That's exactly what we want to see. Okay. This is just a bit different, right? So notice my target is here. Why is my target here and not like way up here? Why is my target not like up here? Well, look at the opposing run. It's large, right? So what did I say? You want to target around the daily open. The daily open's right here. So there's a swing point up here, right? Session highs, low resistance liquidity, and lower time frame. Right. So I can just target that, right? And we ended up forming SMT here. So it's like the perfect place to take your full position off. But you see, it's the same thing. I just went over here. Where is it at? Did I delete it? Maybe I deleted it. Oh, no. It's all this. So all these examples are what I just went over. It's all the same stuff. Yes, what's up, T? Um, Congrats, I missed live streams. Oh, yeah, no problem. Where do you see T-Trade's commentaries for the week? It's a thread of the trade he took. Say you mentioned. T, you want to answer that? Yeah, T analysis. I don't think he did much this week because I mean, there's not much going on. So that's where he posts it. Do you check profiles on the 15-minute? So it's not like I don't have a specific. There's no profile. I mean, there's no like time frame where it's best to see. That's I don't really buy into that. I know a lot of people do that, but I don't get it to be honest. I'm more so looking at if there's an established low or high, and I'm using the hourly time frame. You know, I'm using the hourly swing points to create the higher and low today. I'm looking for manipulation there. So it wouldn't be the 15-minute I get. It may be the hourly, if I had to say. Just to clarify, you didn't trade Tuesday because we didn't see a manipulation to anticipate expansion. Yeah, so yeah, I think it would be this day, right? Yeah, yeah, exactly. See how there's no manipulation here? I'm never trading away from this, dude. I will always miss this expansion every single time. But you see how we don't necessarily have to manipulate, but it's like I can anticipate this happening. So yeah, I'm not going to trade it. It's literally as simple as that. Like I demand what I want from the market. Um, and I know after you manipulate, we get the best expansion. You get this is when you can anticipate it, but also you get the best explosive moves. And knowing that is how you actually invalidate a manipulation. Um, so if price manipulates a low, this is how you avoid getting chops. So if it manipulates a low, nice side. Say with this low to manipulate, price should leave this low in an aggressive manner where it's respecting, right? Not making these deep retracements, right? If you see something like this, right? We should never retrace way back down here. That's invalidation. Totally, you just skip the day. As simple as that. We should see this here. Or if we do something like this at the reversal point. If we just like just chop around or something, that's not our true manipulation, right? Make a deep run past it, not a true manipulation. Um, if we just kind of retrace leaving failure swings, not a manipulation. It looks the same every time. It's expansion, mouth expansion. It's always that. It's the easiest way to explain it, honestly. Freeze? Frozen? All right, hold on. How long was I frozen, by the way? You want me to explain that again? 15 seconds? You guys want me to explain it? A minute? Oh, damn. After the first. Okay, sorry. My bad. So let's do that again. So basically, if you want to look for a reversal off of something, it's always a high or low for me. Then it's always going to look a certain way, right? We're going to trade into this low, and we're going to expand away. We're not going to retrace. Not going to leave failure swings here, right? We're oftentimes going to pair this with an SMT, right? Either with the reversal point low to manipulation low, like this, or on the lower time frame, where it's something like this, right? Something like that, right? But it's never going to consolidate, right? We're not going to make a deep run past the reversal point, right? Going to look the same every single time. And I'm going to show you guys next stream how we use the 4-hour candles in order to align expansion. So if you look here, so if you look at this day here, I'm not trading a daily expansion candle. Look here, right? It's not a daily expansion candle. I already know it's not going to be a daily expansion. But what am I trading within? Trading within a 4-hour expansion candle. See that? So I'm always trading within some type of expansion, away from some sort of manipulation, right? So all this is a 4-hour candle 2 closer. I know that I know that most majority news events and the 9:30 driver is within this time um, interval, right? 6 a.m. 4-hour candle, right? You have the 9:30 open. You have any 8:30 news, all within this candle. So this candle right here is very important. Um, and it's the same approach, right? Where I have a fair value gap here. This candle hits the key level. Not gonna trade this candle, right? I'm gonna trade this candle, right? And you could technically trade this candle, um, but the way this candle forms, I think it's important. Yeah, you see how it goes open high first and validation. So there's literally like invalidations for everything. Like I already went over this. You want to trade a bearish candle. Um, this is not what you want to see. You don't want to see it go open high first. Nope. You want to go open low first. So I have a specific way to trade a candle to candle. So like I can trade this candle too, right? But so like this is my model right here. Right? I went over this last stream. For this candle hits key level, I can form a reversal off this candle, but it needs to form a certain way. You see how we go open low first? You see the key difference here? Um, so yeah, there's an approach for everything. Um, you know, asset upside. Why do you not wait? Why do you know not to anticipate another daily expansion? Oh, yeah, sure. So again, what do expansion candles have in common? Any expansion candle, by the way, it can be a 4-hour, it can be any candle in the market. They all have these small opposing runs, right? So what does that mean? In a bearish candle, you're going to have this small wick, right? In a bullish candle, you're going to have bottom small wick. So basically a small wick and a large body. That would be an expansion candle, right? So you can see this develop like while you can already see um, the daily range developing while it's happening. So if you look here, what are we doing at this point? This is the daily open, right? What are we doing? We're creating a large opposing run, like a relatively large one, right? So what does that mean? That we're not likely to see this on the daily candle. We're not likely to see some sort of large expansion, right? Because the way the daily candle is developing doesn't support that, right? So this is a big part of my trading and T-Trades trading and AM trading. Um, yeah, so right. So if this isn't going to support some expansion past this high, then I'm just going to take my full position off this high around the daily open because I know it's not likely to close an expansion candle to the top side. The only ways it can close is either indecision candle or some just like back to the range, right? Or bearish candle. But the way this candle formed, it does support some sort of bullish candle where we open low first, right? So this manipulation, this little intraday expansion here, I'll trade this all day, even though the candle, I'm fading this candle. But I trade within a 4-hour expansion candle, right? Away from manipulation. But yeah, if you look at this day here, same thing. Um, it's not really the same thing because we actually opened here. I thought we opened here. Actually, like I said, the only problem here, why I didn't trade this day, I have my whole little model here and stuff where the 10 a.m. reverse. I don't actually like trading 10 a.m. reversals. I like trading 10 a.m. continuation. That's one thing because a 10 a.m. reversal, that means the drivers are completely they didn't do anything. I like to see manipulation combined with the driver, and we don't even have any SMT here anyways. But you see how this, you know, or let me try to make a better example. I want to show you an example that I took. Here it is. Really good example here. I'll go to the daily chart here. If we just break this down within like my whole little model here, we can use the weekly time frame. So you have this week expanding right into an objective. So we could get a new phase of price. If I want to trade back to this range, what is going to be inside of this candle? Probably a daily fair value gap, right? So if I want to trade a weekly candle back in this range, what am I going to revert to? I'm going to be more focused on the the next candle, right? The next two candles really to form that reversal. If it's going to be a candle to reversal into expansion, it needs to have that small opposing run, right? So that's what it has here. And again, why do I even use this rule? It's because you're going to get a new phase of price quickly, right? I want to trade a reversal, right? So if price expands to a higher low, it's not going to hang around for multiple candles. That's how you avoid consolidation too. Um, it's going to basically make that new phase of price in the first two candles, right? I have this opposing candle here. Whoops, weekly time frame. This candle hits the key level. It's the same thing right here. What did it close like? Expansion candle. So if I want that new phase of price of expansion away from this key level, I'm gonna have that small opposing run, right? This candle here, I can just look for continuation, right? It's a candle two closer. What do I demand? A small opposing run for continuation to this high. It's actually a really, really simple process. Um, but if I go to the daily time frame, what you're gonna see, you have a range from low to high. Uh, EQ of the range is hit, right? Once we expand into EQ of a range, we can often consolidate. So we get, right, expansion, consolidation, manipulation of this range low. So now, ideally, you want to see this expansion, uh, not, this is kind of like lackluster, honestly. Like these deep retracements are not usually what you see, but it is what we got. Um, so again, just think about market maker models. We want to see the sell side of the curve PD rays get disrespected, and then once they get closed over, used as support, right? Again, we close over that. That's just showing strength here. But what I really want to point you to is this here. If I go to NQ, it was the weaker asset, right? The Monday open is right here. So what do? We opened that Monday just more so just consolidated, right? And Tuesday really did the same thing. And what we're waiting for is a valid manipulation, right? So this is Thanksgiving week. So it's not going to show Thursday's candle, but what we do is we manipulate with the SMC at the creating the weekly low. So it's just like a weekly profile. If I want to create a weekly candle bullishly, I want to trade from some relevant higher low. And that would be manipulation, right? So we trade it into this low by showing the 4-hour chart. It's just all these lows being traded into with SMC. So I can expect the next day to expand, right? This day manipulates, the next day expands. So what am I looking for? That small opposing run supporting expansion away from this here. I'm looking for a daily profile, looking for some sort of intraday, maybe intra-candle chain state delivery or something, right? But for me, my favorite is to trade away from manipulation on the hourly time frame. There's an hourly low, right, with an SMT. So just like the weekly profile, how we did literally the same thing, like actually the same thing, right? It's the weekly range, this is the daily range. And what are we looking for on the opposing side of manipulation always? Failure swings, these failure swings. So that's why this was valid, by the way. I forgot to mention that. But look at the opposing side of this manipulation. What do we have? No established high of the week. So it's just like a daily profile where we manipulate. There's no established high today. Um, that's good, right? Adds to our narrative. And then I can look at the lower time frame here and use a driver where we manipulate this low at 9:30 with an SMT. This is something I traded here. Right, there's the SMT. You have a low resistance liquidity here. And yeah, we see the failure swings here. So it's a really good day. Uh, yeah. What are we at right now? Okay, we're a little over an hour, but it's fine. Uh, yes. 12, 18. So when are you trading it again? Oh, I traded this week, bro. I'm not gonna lie. I had a really good week actually. If it's there, I'm gonna trade it. But you have to understand my approach is so Like, look at all these pairs I have, dude. I demand like I'm very picky. Um, just this hourly manipulation you do not get every day. Like look at Friday on NQ. I'm not trading this day because there's no manipulation to high the day. But I can trade this day and this day because it meets my requirement. These days right here, this day on Friday and Tuesday, I cannot trade because they don't meet my requirement. So a lot of the days, and that's just assuming that the higher time frame even aligned with these profiles. You see all these pairs here. I don't even. You may think I trade a lot, but I actually don't. Like um, majority of the days, they don't print what I demand from the market. So, but since I'm so picky that I can trade all these, I love how high frequency Garrett trade was. So, yeah, and so basically, what you guys see me trading is actually where I look for the fractal model. Um, this is another stream that I'm going to talk about, but first I just want to talk about like how I trade first of all. But here is a fractal model opportunity, right? It's just what I demand for the market, like framework wise, and just naturally is when I get the fractal model, right, of a candle to closure where I want to see a manipulation. This is where I look for that. And then since I'm expecting expansion after manipulation, this is where I can look for lower time frame continuation signatures with the fractal model. So like maybe a 15-minute. Um, I think I did take a fractal model here somewhere, dude. Was it right here? Yeah, it was right here. I took this pretty much right here. So it's not like the best. So if you look here, the opening price is really down here. So I could take this here. This is also valid. I think I might have took that. I don't know. Maybe I took this. Either one is valid, but um, you see how I'm trading away from manipulation here. So either you can trade this like on the hourly time frame, hourly 5 minute or something, or you could trade the continuation. And oftentimes, since it's so fast, you're not going to get an hourly 5 minute continuation. Where what I mean by that is like we're probably not going to print an hourly fair value gap here to get a candle two closure. It's going to happen in a lower time frame because this expansion is going to happen in a couple candles usually. Um, like here, just for example, like New York session just moves so quickly. Um, yeah, that's what I mean by that. So you're only going to get that hourly candle two closure usually at the reversal point, and then you can look to trade, you know, the intracandle CSDs for like continuation, right? That's the only opportunity you're going to get usually. But yeah, I looked for like 15-minute, 30-minute models. You're gonna have like 15-minute or 30-minute key levels or candle two closures, so you can take that for continuation. Uh, where we at? But yeah, I do get a lot of trades, or I get like a trade every week, usually, or every day, almost. And they're pretty high probability just because of the framework that I use. But I'm never gonna get like a trade a day on a single pair. It's like never gonna happen. Probably never. Seems like weekly is also important. Yeah, weekly is. Like I use the weekly chart. I know that T trades or aim trades. The aim trades definitely doesn't, but I do personally. So it's like it should give you some insight, maybe where the weekly can or expand. But the daily chart is obviously more. So I'm trading within daily candles, so you need to know where the daily candle is going. Most importantly. Yeah. What prop firms do you trade with? MFU and Top Step. How much did you risk? So I trade on 50Ks. I'm probably gonna switch to 150Ks pretty soon, but for 50Ks, I risk like around $200, $300. I trade minis, so it's hard to get that exact amount that you want, right? Kind of hard because on Top Step you can only trade with two contracts, so I'm like forced to trade minis because micros, two micros a lot of times is not a lot of risk. Not Yeah, I do have many pairs on watch list, but I'm telling you, like my last trade on here was weeks ago. I'm gonna show you my last trade on HG, bro. I'm telling you, it does not happen as much as you think because these pairs here, they don't have volatility drivers, so I really, really demand something extremely clean. If you look here, I think it was. All right, after this example, I'm probably gonna end it. What we have here is a candle two closure, right? I have lows to target. So if you look at this weekly profile, we have Monday low of the week, which didn't really form an established low, just trading away from failure swings. So eventually I want to trade back to this low. Now this was a valid day to look for potential distribution, right? I would look for distribution this day all every day of the week, right? I would look for a small position run here, but what we get, you're gonna look here on the hourly time frame. What we get is we open up right here. So I can't say that there's anything relevant here to trade away from. I can only say this high. You're basically inside this range. I'm not going to trade away from these fair swing unless we maybe close under here, but that's not really how I trade. I would want to see a manipulation here. But what we do is we just expand through it, and then we manipulate the high here, right? And then we get this closure here. So we expand, consolidate, and again, it's the same thing. Or like, there's nothing here to look for the higher that it to form into. So if I mark out this, I'm not going to use the wick in this case because this opposing run, so we're kind of closing towards the low. So I'm going to use the whole range. I'm not going to, if it went all the way up here, that's way too large of a wick. I'm going to use this, right? That's about right, right? So I want to see something like that. So either we're going to form the high from some PD array that's internally to this panel two closure, or we're going to form an intraday reversal. And an intraday reversal is always a sweep for me. So we expand, we consolidate. So what is that? A continuation signature. Meaning once we take out this consolidation high, go to 30-minute. Once you take out the consolidation high, we're going to look at the opposing side of that. What do we have? Failure swings. Right, that is like adding influence to our manipulation. And then we're going to confirm this manipulation with what? The opposing run of the daily candle. So now this manipulation is supported by an expansion candle, right? After we manipulate, we expand. We're going to expand. We want to be inside of an expansion candle. So when we get this closed through, I can trade this. You see how clean this is? This is the type of stuff that I demand from these like other pairs and stuff. I took something like this. I didn't put my stop loss up here because I don't expect price to come. I think I put it like 0.5 that. But I was looking for this low. I was looking for Monday's low, but it never got there. It was still a good trade. I took off that 30-minute CST, by the way. Uh, I had to close a trade around 1500. So yeah, around here. Because top step you can't hold overnight, so I had to close about there. But yeah, it was a good trade. But I'll probably wrap it up here, guys. Hopefully you guys enjoyed, learned something. Next stream, probably go over like how I use the 4-hour candles because pretty interesting. It's kind of like AM's 7-hour candle, but a little bit different. Yeah, happy holidays. Hope you guys enjoyed, and happy New Year.